All right, so welcome everyone.
Good
This is
morning.
episode. Yeah, good morning. For the first time,
Early
we're
podcast.
recording the podcast at 10:30, a little bit earlier. So this is episode number 8 of the EZTALK, and today we're gonna be talking about: Are you able to finance a car if you had bad credit?
Yes. The answer is yes.
The answer is yes. See you guys tomorrow. All
There
right.
are two main options, because lenders, they want to make sure the car gets paid. But at the end of the day, you do have two options. The first one, obviously, is a buy here, pay here. That the
Right.
lot does not really care about your credit.
Probably the worst option.
Yeah, it's not the best one. Because most likely your options as far as cars are going to be limited. But it's a quote unquote guaranteed approval. They're going to ask you for a down payment. All right. You make the
Right.
payments here directly to the dealer, and that's it. So, but they tend to be, higher mile car.
And really high interest as well.
Yeah.
Usually buy here, pay here.
Any
over,
bad credit.
yeah,
Any bad credit
over
is
20
yeah.
something percent.
Yeah, even if you go through a lender, realistically. The other option is to find a subprime lender. A subprime means is that they give loans to people without the ideal credit profile.
Right.
Talking here, bad credit, pretty much. Subprime lenders, they finance a car, obviously at a high interest rate. They usually have specifics about minimum income they're looking for. And obviously, they're not going to, approve you for a $50,000 car. They're also looking for a lower value car.
Yeah. It's a balance of a few different things that
Yeah.
they feel comfortable that you're gonna pay the car off.
The tricky part is that they're not going to finance 100% of the car. They're only going to finance usually 80% of the total value of the car. So that means that you're going to have to put a down payment. At the end of the day, asking for a down payment is just less riskier for them to give you the loan on the
Right.
car. Most of the time, they're going to try to get purchase an extended warranty because they want to be covered that if the car breaks down, the car will get fixed, and you also going to be able to make the monthly payment because mechanical breakdowns is one of the main reasons why people get the car repo.
Yeah.
They either
They pay their car or they repair the car.
or repair the car. So if they don't have the money for both, they're gonna fall behind the payments, or they're not gonna fix it, and they're not gonna keep paying for a car that is broken. So subprime lenders really like when we send a structure with a service contract, which is a term for extended warranty, because it makes them protect their asset, which is their asset is the car.
Right.
They have so much money in the car that they're lending you the money for.
Yeah. You have
They
to
want to make
you
sure
have to
it's
remember
protected.
that these lenders are nationwide and they have
Well,
hundreds of thousands of cars on the street, and that's their money, their assets.
that's
So
their assets.
yeah, they really want to take care of those cars
Yeah.
with the warranties.
So the options, yeah, you have options. They may be limited. We see nowadays a lot of dealers selling cars buy here, pay here. But like I said, they tend to be high mile cars and older models because the value in those cars is not much, so the dealer won't be financing a lot of money on the car for you. But yes, you do have options. It's always recommended to look around. Sometimes a blender is gonna come back with a better approval than other, even though you don't have the perfect credit. As long as you have an income, that you're able to prove. I'll say from what we see, at least 3 months, 5 months, with over $1,500 income a month, you can get an
Into a
approval
car.
on the car.
Right.
The best way to do it though, to pay it off, because you're gonna pay. Honestly, you're gonna pay a lot of money on interest over time. So again, we go back to the basics. Just try to finance it for the shortest term as possible. Because the longer you finance it, the more money you're going to pay on interest. So try to pay it off as quick as possible. The quicker you pay it, the less interest you're going to pay.
That's always a smart idea, even if you have a good credit. Yeah.
Pay it off earlier. If your payments are 250, 300, and if you're able to send, higher payments a month, they're going to be directed towards the principal, and that means that you're going to pay the car off quicker, so that's going to save you money on the interest.
Right.
Like, let's say if the original term is 5 years, you pay it off in 2 years and a half, you pretty much cutting the interest in half, so that's going to save you a lot of money at the end of the day.
Let me ask you a question. What do you think, if I'm a person with a bad credit, where do you think I have a better chance of approval? With a subprime lender or with the buy here, pay here? Where do I have a better chance of getting approved, and what's the difference? Where
I'll say the chances are equal, but with the lender, I mean, you're going through a financial institution, so if you really want to try to fix your credit, that's the best way, because buy here, pay here, they don't report to credit, most of them.
Right.
So I think personally it's a good thing that they report to the credit, because if you're making the payments on time, eventually it's going to help your credit, and then you're going to be able maybe even refinance a car, if you have it for 6 months, and then you go and talk to your bank and say, hey, I have this car financed through whoever the lender is, and then I want to refinance it. They might give you a lower rate, because they see that you've been making the payments on time.
Right.
So I say the chances are equal.
I think it's a little bit easier buy here, pay here.
Probably.
But the deal is not. It's probably worse.
Yeah, because buy here, pay here, the dealer, they probably won't finance it for that long. They want to make sure the car gets paid as soon as possible.
But I mean, because where I'm getting this from is, we usually look at dealers down in Miami. They finance pretty newer cars, and we know they're doing buy here, pay here. They're finance the cars themselves, and for what we see, we haven't been down there or anything, but what we have seen is they ask for new cars, really low down payments. Of course, that's going to be like really high interest, and they're going to probably have it for like 5 years. So it's, for the customer, probably not a very good deal.
Yeah.
But I think they have a good chance of getting approved, I think.
Totally. Most likely. I mean, as long as you bring the down payment they're asking for.
Right.
And you make the monthly payments, it's pretty simple.
That's where my question was. Like, I think it's easier to get approved for a buy here, pay here, but looking at the whole loan, you're gonna pay a lot of money.
Yeah, that's what it is. And that's the other recommendation. Even though you don't have perfect credit, try to find an approval, and then maybe you can refinance it. After 6 months that you've been with the car. Like I said before, go to your bank and say, hey, I have a loan on this car from whoever the lender is. What are my options for refinancing? Most likely they're going to refinance at a lower interest rate, because they're your bank. They know you a little bit better, and high probability is that, if you cannot get a loan through them directly at the first time, that's fine. Just, try to find a subprime lender that will actually approve you, and then 6 months or a year into the car, just refinance it. It's just gonna make your life better, honestly.
Yeah.
So that's it. What we have for today. Yes, you have options even if you have bad credit. Just the dealer is supposed to always help you. If you have questions, just ask them. And try to be upfront with the dealer. That's what's gonna help you, because we have several lenders here, for example, but each lender, they have a specific customer profile they're looking for.
They work in different ways.
They're all
Every
different.
lender is the same.
Yeah.
It's not the same. They work in different ways, and they prefer different types of customers. So that's why sometimes when people come in and they ask us, but don't run my credit 3 times or whatever, but we have to send it to the three different banks or whatever because they prefer different
Yeah.
type of customers, so it's a better
Yeah.
chance.
Yeah. So that's what we have for today. Make sure you send us the questions if you have any questions through Facebook or Instagram, and
YouTube.
we'll love to answer all the questions we have.
And we'll see you, or you're gonna listen to us on the next one.
Bye.